everyone, I'm Charmaine, a research analyst at iFAST, and today I'm joined by Ong Xun Xiang, Head of ETFs at Lion Global Investors. In this episode, we'll be discussing the Lion China Merchants CSI Dividend Index ETF, which provides investors with exposure to Chinese companies that prioritize returning capital to shareholders through dividends. So to start off, we have seen on headlines about how volatile China equities sometimes can be. Can you share why we should be considering investing in China now?
At Lion Global Investors, we believe China presents a long-term growth story for investors. China equities have rallied a lot in 2025, driven by breakthroughs in artificial intelligence, also known as AI, with DeepSeek leading the charge. A recent meeting between President Xi Jinping and China's top tech leaders provided another boost to Chinese tech equities. This meeting signaled clear government support for China's private tech sector, dispelling a lot of fears about regulatory crackdown. It suggests that the worst is over and the government is working collaboratively with China's industries to build an innovative and technologically advanced economy. So while Chinese tech stocks have dominated headlines, dividend-paying stocks within China have been hidden gems. So investors who allocated capital to the CSI Dividend Index instead of CSI 300, which is China's national benchmark, actually made a lot more returns in the past 4 years. So this performance gap is striking, with the CSI Dividend Index making 21.4%, while the CSI 300 actually losing 16.9% during this period. So during this period in the past 4 years, the CSI Dividend Index actually posted positive gains in 3 out of 4 years, compared to the CSI 300, which only delivered 1 positive year. So all this demonstrates the CSI Dividend Index potential resilience and ability to withstand a lot more market downturns. So in 2025 so far, valuations of Chinese dividend stocks have appeared undervalued. So this is evident when we compare the CSI Dividend Index P ratio against other major indices. So as of the 28th of February 2025, the CSI Dividend Index was trading at a P ratio of around 7.3. So this is significantly lower than the CSI 300 index, which was trading at a P ratio of around 15.8, or the STI, also known as the Straits Times Index, which was trading at around 12.6, or even the S&P 500 within the US, that is trading at around 25.4 times. This undervaluation suggests a lot more room for upside potential if the CSI Dividend Index valuation expands higher. Meanwhile, investors can continue collecting steady dividend payouts while waiting for potential price appreciation.
That's very interesting. So could you share more about the Lion China Merchants CSI Dividend Index ETF, and how is the CSI Dividend Index actually constructed?
So this ETF is a collaboration between Lion Global Investors and China Merchants Fund Management. The Lion China Merchants CSI Dividend Index ETF is the first CSI Dividend Index ETF listed outside mainland China. So this ETF tracks the CSI Dividend Index, which comprises 100 Shanghai-listed or Shenzhen-listed A-shares with high cash dividend yields, stable dividends, and a certain scale and liquidity. So one key criterion includes and involves continuous cash dividend payouts for at least 3 years. So this index has a 10% securities weightage cap, and for smaller cap stocks below 10 billion renminbi in terms of market value, a 0.5% weightage cap is applied. The index is rebalanced annually in December and will make ongoing adjustments for ad hoc events like spin-offs. The CSI Dividend Index has a dividend yield of 6.2%. So this is higher compared to the Straits Times Index at 4.7%, higher than the CSI 300 Index at 3.0%, and also higher than the S&P 500 Index at 1.2%. While waiting for potential capital appreciation, dividends help investors lock in capital gains, regardless of volatility, and improve certainty of a passive income stream.
Oh, that's great insights. So what are some key features of the Lion China Merchants CSI Dividend Index ETF?
So many China equities ETF are heavily weighted towards volatile stocks, making them less ideal for investors seeking income. The Lion China Merchants CSI Dividend Index ETF offers targeted exposure to financially sound companies that pay sustainable dividends. The ETF has three key features. Firstly, the index focuses on companies with a proven track record of consistent dividend payments for at least the past 3 years. Secondly, companies are selected based on their robust financial health. So these companies are typically steady, having strong cash flows and high free cash flow to dividend coverage ratios. Thirdly, this ETF helps investors gain access to a diversified portfolio of dividend-paying stocks, generating a passive income stream.
That's very interesting that the company thought of an idea to help investors to remember the three key features of this ETF. So I realized C for consistent, and S for steady, as well as I for income, and that actually forms out CSI. So moving on to the next question, what are some of the sector exposure for this ETF, and also what are some of the top holdings?
So as of the 28th of February in 2025, this index is diversified across numerous dividend-paying sectors. Finance makes up the largest sector, with energy and industrials rounding up the top 3 sectors. The index is diversified across 10 different sectors. Among them, one key constituent is COSCO Shipping Holdings, which is one of the world's largest dry bulk carriers. So in the past 3 years, COSCO Shipping Holdings have consistently maintained a dividend payout ratio of around 30% to 50%. So through this ETF, investors gain exposure to all these dividend-paying constituents. Through the Lion China Merchant CSI Dividend Index ETF, investors gain a building block to earn stable dividends and invest in income.
Okay, I think that's a lot of information for investors or our viewers to even digest. So are there anything else you might want to share?
Of course, the Lion China Merchant CSI Dividend Index ETF is the first CSI Dividend Index ETF listed outside mainland China. So this ETF is an excluded investment product, also known as EIP, and accessible to all investors. The ETF is open for subscription on the FSM platform at $1 per unit from the 10th to 24th of March and can be traded on the SGX starting from the 28th of March in 2025. The SGD ticker is INC, which stands for income, and the CNH ticker is ICH. So with $1, we hope you take this opportunity to earn steady dividends and invest in income.
Thank you, Xun Xiang, for your insightful sharing. So for our viewers, if you'd like to learn more about the Lion China Merchants CSI Dividend Index ETF, you can visit the Lion Global Investors website.